Welcome back, everyone. Today is January the 23rd, 2022. Today, I'm going to be looking at 5 stocks that are on my radar going into next week. But first things first, we're going to look at the S&P 500. We're also going to look at some targets to the upside and to the downside and the type of week that we had last week. We still continue to decline. We dropped 5% on the week on the S&P 500. But before we get into that, guys, please give this video a thumbs up, share it with your friends, and don't forget to subscribe to the channel if you haven't already. We release videos every single week. And if you are interested in trading with us on Discord at Wealthy Mentor Trading, we do have a $99 promo for 2 months. That link is in the description, and that entails swing trading, day trading, daily watch lists, along with analyst upgrades, breaking news, and the option callouts if you are trading options or if you are just day trading. So if you are interested in that, hit the link in the description. That should take you to the checkout page. And if you are also want to join our community, you can also join for free at Wealthy Mentor Trading on Discord. We do have a link there that you can join the free group. All right, guys. With that being said, as you guys can see here, we do have the S&P 500 chart open. And, we did start off the week on Tuesday due to the Martin Luther King holiday. And, we've been on a downtrend ever since that day. We did open up right here. We did have 46.62 as clear resistance, unable to break that. We did gap down, right, at that 46.30 area right here. And we pretty much consolidated around 4,600, unable to hold that, and completely broke through 4,500. And we closed Friday session, bearish around that $4,400 mark. If you want to switch over here to the daily time frame, you can see a clear picture, right? It's been downhill ever since all-time highs. Pretty much just the beginning of January 2022, we've been down trending all the way down here to 4,400. The Fed, decided to hike up interest rates, and that's going to spook the markets. So, ever since then, we've been on a downtrend. So going into next week, I do have that 44.50 area as my first entry point, right? Above that, I do have targets of 4,500 and 45.50, right? We do have overhead resistance at that 4,500 mark, right? However, we did quickly break through it on the way down. So if we do see some momentum, we could potentially see ourselves going all the way to 45.50, as it is some strong resistance right here, left back on September 2021, and also a point right here back on December the 1st. So be sure to look at that 4,500 mark to 45.50 for overhead targets. Now, to the downside, if we cannot hold 4,400, we do have 43.75 as the next key support zone, along with that $4,300 area where we bounced off back on October the 4th and pretty much went all the way to 47.50. So there is potential here for a bounce play at that $4,300 mark. And obviously, if we can't hold that, we do have 42.60 as I've drawn up right here, and a nice key line right here at that 42.35 area. Overall, the markets, I said, did correct 5%, and we are oversold on many time frames, especially the daily and the weekly on a lot of key big names. And some of the names I'm going to be discussing today. And I'm going to be talking about Apple, Tesla, Peloton had a massive drop, Amazon, and Netflix earnings bomb. All right. So with that being said, I do have the first name on my watch list today, and it is going to be Netflix. I am going to switch over here. NFLX is the ticker. And you guys can see on the weekly, right? We have that big $700 hit, which was all-time highs, and we've been trending down ever since. Now, Netflix did drop 27% on the week and is hovering around that April 20th, highs right here, around this area right here, where it is clear support. And, from a technical standpoint, we are oversold on the weekly RSI, so that is a big deal. And it makes for a perfect swing trade. And for myself, I'm going to be looking at that $4,300 mark as overhead resistance and my entry point, right? We do have some strong support here, which is where we landed. And this is on a weekly chart. We bounced off that 380 mark, and we are hovering around that $390 to $400 area. But for myself, if I'm looking for a swing play, I am looking for that 430 mark to break for potential push to that 460 area, which is the bottom of this consolidation area where we completely broke through on an earnings miss, basically, right? As I said, we've been down ever since $700, and we are oversold on the weekly time frame. So, you're going to see a bounce, and to make sure that this bounce is for real, I am looking for that 430 to break for potential take profits at 460. And if we move higher, we'd look to test that $500 area, which is the bottom of these candlesticks right here. Now to the downside, if we cannot hold 380, we have a ton of price action over here, all the way down to that 334 area. So if we do break that 380 mark and you are on a swing trade, or if you're buying puts, right, or shorting the stock itself, look for 380 to break for potential drop all the way down to that 334 area. Okay. Overall, I am neutral on Netflix, right? We pretty much erased all of last year's push, ever since the market popped up on the COVID bounce and we went up all the way to $700. It was no stopping it. Right now, we're testing these areas that we haven't seen in quite a while, right? So this is back on 2019, April, right here was a top. And the breakout point was that April 2020, where we broke out and, we had pretty much never looked back. We consolidated here from July 2020 and we broke out on August 2021. So since then, it's been blue sky for Netflix. And right now, like I said, I'm in uncharted territories and we are testing these lows right here. This is strong support at 380. So I am really expecting this area to hold for potential push higher. And we are oversold on the many time frames, especially the weekly, which is a major time frame. You're going to see a bounce. But like I said, look for first indicator above that $400 mark and for your entries above 430. All right, guys. So that's Netflix. They had a 27% decline only last week alone. So keep that in mind going into tomorrow. Another name that's important to me, Amazon. Now, Amazon is not reporting earnings this week. It is reporting next week. But I thought I'd bring this to your attention. It did drop quite a bit as well, 10% on the week after the market in general had that pullback. Now, Amazon is at that key support at that 28.82 area, which is important to me. It has been consolidation area ever since July the 20th. And, we're at that point right now where we can potentially see a bounce, right? We saw a bounce right here on February 2021, another one right here on September 2020. So this area for me is a key area because, we could potentially repeat these two instances right here on a bounce and potentially move higher. So on a swing trade, what I'm going to be looking at is to see if this 28.82 holds for my entry point. If that does hold and buyers do step in with some nice volume, and of course, if the market conditions are great, if we hold 4,400 on the S&P 500, look for that as your entry area, right? For a potential test of that 3,200 zone. It was overhead resistance multiple times here. So we are testing this once more if we do hold that 28.82. All right. Now, like I said, we don't have earnings next week. We have it the week after. And, to me, this area specifically, right, June 2020 lows, and we're holding it once more. But if we can't hold that, look for a break below. And as you guys can see here, we did break slightly below that on the week, ending Friday at 28.52. But I'm looking to see if how we open tomorrow, right? I'm looking to see if bulls step in around that area. And if they do, that would be a perfect entry point for a great swing trade on Amazon. Now to the downside, we also do have that 27.21 area as clear support. So if we cannot hold that 28.82 to 28.50 area, look for 27.21 as the next key support level, all the way down to that 26.23, as you guys can see from the dotted lines here that I've drawn out. Okay, so if that 28.82 holds, look for a push up to 3,200. And, if we do have strong earnings, look for the earnings to push us back into this consolidation area around that 3,200 mark to 33.67. So Amazon is a great opportunity to get in, but wait until see if how the market reacts tomorrow. And if we do hold that $4,400 mark on the S&P 500, that is crucial, right? Always look for the market itself and then trade within the smaller names within it. Okay, guys, so that is Amazon, and it is on a 10% decline just last week alone. Another name that was significant, and if you guys haven't heard about it, I don't know where you guys have been, because Peloton is the name, PTON is the ticker, and Peloton dropped significantly, right? We dropped up to 25% after reports came out that Peloton would be halting production. And, and then it rallied 12% on a report of their earnings. And they had revenues expected to hit around 1.4 billion in the fiscal Q2, which ended on December the 31st, which would lag the consensus that was looking for in that 1.15 billion. So from a technical standpoint, this stock is heavily shorted, right? Everyone that got in on the short definitely made a lot of money. But like I said, Thursday was the big short where it dropped up to 25%. Friday came along with the whole earnings and everything, and it did rally 12%. So what am I looking at going into next week? As you guys can see, this is the weekly chart, and we did drop down, hitting that $23 support line. So overall, we did close Friday session at $27. So going into next week, if we can get above that $30 resistance point, I am looking for a squeeze all the way to $37 and $42. Now, I say squeeze because there are still a lot of traders out there that are short Peloton. And, when a stock like this is shorted so heavily, right, and the stock moves up, those people that are shorting the stock are forced to close their positions. And in turn, what that happens is it drives the stock higher at a rapid pace, right? So with such a name like this being shorted and the earnings coming out with the numbers that they had weren't as bad, it did rally 12%. So I'm going to be looking for that rally to continue into next week. So, but before we get going there, we're going to look at that $30 area as your entry point for that squeeze to happen to 37 to 42. Now, analysts do still have target analysts do have targets of $40 on Peloton. So it's not going to zero as many people thought, right? And, it's one of those names that came out with some bearish reports and everyone jumped on it, but, it's still alive. And if we do drop down and see weakness going into next week, look for that $23 area as clear support. It is the bounce point here. And if we break that, look for a potential drop all the way to 1750, which was the low back here on March the 16th, 2020. And it was that COVID low, right? It was that bounce point where pretty much everything dropped and then bounced from there. So $23 is clear support. $30 is that entry area for potential squeeze higher. All right. Another name that is significant to me, and they are reporting earnings on January the 26th, and that is Tesla. TSLA is the ticker. And here we are on the weekly. I am going to switch over to the daily real quick and to give you guys a clear picture. And here's Tesla, right? Now Tesla declined 10%, again, all due to market weakness. And from a technical standpoint, right, we are testing that area and we're going down to that area of that 910 drop, right? This was that gap fill that everyone was wanting to get filled right here, right? We dropped and filled that back on December the 21st, and then we rallied all the way to 1,200 bucks. And here we are again, once more, about to test that area. And, this is significant to me because if we cannot hold that 910 area going into earnings, and if we do bomb on earnings, we could potentially see ourselves going down to that 880, 850 zone, which we haven't seen in quite a while, right? This was an area where we pretty much broke out from back on October the 21st, 2021. So on an earnings bomb, look for that 910 not to hold and for us to push lower and test 880, 850. Now, Tesla did receive a 10% pullback, but if you look at the majority of the big names out there, they had big time pullbacks. And Tesla kind of, it pulled back, but not quite a bit. And it's one of those names that's highly inflated. Obviously, a lot of exuberant traders out there looking for this name to drop, and earnings is the perfect catalyst for that. So watch out for that 910 area, right? Not 910, $900 area. If we cannot hold this bounce area right here on that gap fill back on December the 17th, look for that push down to 850 on an earnings bomb. All right. So that is Tesla on the daily time frame. Now, if you are a bullish trader, right, look for that $1,000 area for my entry point, right? This is an entry area for me. $1,000 is a psychological point for a potential push up to 1020 and 1050. Now, overall, the market needs to push higher. Obviously, we are at that $4,400 area. But if we can get over $1,000 on Tesla and the market shapes up and corrects above 4,400, we can definitely see Tesla have a nice bounce. Or even on an earnings beat, we could potentially test this area right here, which is clear resistance at that 1100 to 1120 area, where we got one rejection here, and the latest rejection around that January 13th, where we got twice, two candlesticks on the daily time frame, one rejection, two rejection, and we finally pushed down. So on an earnings beat, look for 1100 to 1120 to be tested. On an earnings bomb, look for that break of 910, 900 for potential push down to 880, 850 on Tesla. All right. So they are reporting on the 26th. So next week coming up. Okay, one last name that is also reporting earnings on the January the 27th, right? Right after Tesla, the next day. And Apple was one of those names. AAPL is the ticker. That also declined 5% on the week, right? Here we are on the daily time frame. We did have all-time highs here at that 183 mark, and ever since we hit that, we've been trending lower. We basically tried to retest 177 and we got rejected from there. And I was looking for that 168 mark to hold. It was clear support for me, right? It was the top over here back on December the 1st, and it held twice right here on the 20th of December and once more here on January the 10th, right? But when we bounced here, we couldn't break overhead resistance at 177. So clearly it wasn't as strong as that we thought. So now we broke past that 168 area due to market weakness. And as you guys know, Apple does tend to move with the markets, right? And like I said, Apple declined 5% on the week, which was on par with the S&P 500. So going into next week, we do have that 157.50 area as clear support, right? It was previous resistance right here on this peak of September the 9th, 2021. And as you guys know, previous resistance now turns to support, right? I am looking for buyers to step in at that 157 area. Now, that is a great play for you to step into and purchase some shares of Apple. And if you are an options trader, it's a great area to see if buyers do step in and potentially push this back into that 160 to 168 area, testing this overhead resistance. Now, like I said, we do have earnings on the 27th. So, if we bomb on earnings, let's just say we cannot hold this 157 area, where could we see ourselves going? I do have this 138 right here as clear support. It was the bounce zone back on December the 1st, 2021, and that pretty much led us to all-time highs, right? So if we do get an earnings bomb, look for this area right here to get hit and receive a bounce from. All right, now on an earnings success, right, you do want to see us bounce above that 168 area for potential retest of 177 and hover around this area and look to see if there's market strength for us to proceed higher. All right, I'm going to wait and see approach on Apple. 157 is a key area for me. And if I was entering on this trade alone, I would look to enter on that 168 area. It is a safer area for me. And also, if there's a 157 drop and we consolidate around here and the volume's good and market conditions are shaping up, I would look to enter here. And then at 168, I would look to increase my position. So you have two options. You could enter at 157 to see if the market conditions are good and if buyers are stepping in. Or if you're a breakout trader such as myself, look for that 168 area to break to enter in on for a potential push higher into the 170s. All right, guys, so Apple is reporting on the 27th, so it is a big name, and there's a lot of names reporting earnings, so keep that in mind. All right, so those are 5 stocks that are on my radar for next week. Apple, 5% decline. It is at that crucial area of 157, reporting earnings on the 27th. Tesla, 10% decline, right? Look for that $910, $900 area to hold. It was the gap area from a few weeks back. If we drop on earnings, look for 850 as your best friend, right? Peloton dropped 25% on Thursday. Friday came out, bounced 12%. Look for potential squeeze play on Peloton above 30 bucks. Amazon declined 10% on the week. We are hovering around that June 2020 lows, and that was a bounce play. So look for 28.82 to hold for potential entries on a swing trade opportunity. And Netflix, as you guys know, big name, 27% decline on the week alone. We are around those April 20, 2020 support area at that 390, 380 area. Great potential for a swing trade. Look for a break above 430 for entry point on a safer trade. We are also oversold on the weekly RSI, so that is big news here. All right, guys, thank you so much for joining in. Trade safely, and during these times, the best thing I could stress out to you and what I tell Wealthy Mentor Trading members is to stay patient, right? Let the trade come to you, let the opportunities come to you. And this is a great time for a lot of you guys to make some great gains just by staying patient and waiting for the market to correct. And when it's finally done correcting, you can pop in and pick up your favorite names for a great price, especially in these oversold conditions that we're in. All right, guys, thank you so much, and look to see you guys next week. Bye.